All right, yeah, I think the webinar came at a perfect time today, because we've been talking about quite a few things since Sunday, and let's get all caught up here. All right. So here last night, and we've been talking about this, since Sunday, setting up this way, right? What we wanted to see, and I just want to go over this so you guys see how we're set up here, and everybody can make their own decisions. What? Thought I liked it. Hold on. Can make it easy on me. All right. I kept it short and sweet to the point here yesterday, just so we know what to keep an eye on. All right, so this was yesterday, okay, going into today's session. And what we've been talking about, if you guys remember from Sunday, again, this is open to everybody. But anyway, no big deal. What we've been talking about recently is we kind of had this drift lower, okay? Where it's almost like they're sneaking in weakness. Remember, we were talking about, you have a lot of people, we were talking about the CTA selling that was lined up for a few weeks now. And obviously, as it happens, you get more and more people talking about it, more and more eyeballs on it. So a lot of times, if that weakness is going to show up, there's either going to be plenty of squeezes in the middle of them, right, to keep people off guard, or they sneak it in. And in my opinion, that's what's been going on. They've been sneaking in some selling at the index level. And the reason I say sneaking in, it hasn't been a sell across the board, right? What we've been seeing is more of an inflation type trade, right? A higher for longer. You're hearing that over and over, that line over and over again, where because of inflation and the stickiness of inflation, the Fed is likely to keep rates higher for longer. Okay. Now, and we'll talk about this a little bit more. There's a difference between that and the Fed having to ante up rate hikes to combat inflation, right? If you remember last week on the Thursday webinar, we spoke about, inflation as a whole by itself is not necessarily a bad thing for all equities. It actually could be a good thing for a lot of equities. What the Fed may do about that higher inflation, that's what's a problem for the markets, okay? So right now, I think what the market is kind of pricing in here, and based off the flow and the price action we've been seeing, is that yes, inflation's sticky, but the market's not convinced that the Fed is going to get off the current game plan of raising just a quarter, even if it may be an extra quarter rate hike, right? Even if it may be rate cuts getting pushed out completely to next year. All right, what the market's really concerned as a whole, okay, is if they really got to step on the brakes and throw in some jumbo hikes, right? That would be a problem. So what we've been seeing, and we've been seeing it in a lot of flow too, they're buying stuff that won't be affected as much and may benefit from sticky inflation and elevated rates, right? A lot of commodity names, energy names, stuff like that, okay? What's interesting is the selling on the other side, the names that are supposed to get hit from higher rates, they're not necessarily getting drilled across the board, some doing worse than others, right? The price action's been kind of messy, but you also have some things that have been hanging in there and performing okay, all right? So the market is not totally sold on the Fed getting off the current game plan. And what happened today, and in my opinion, the catalyst for the squeeze, where the markets were, the indexes were just dead, and we were just seeing more of that sticky inflation trade, right? We saw a couple of energy names see buying, some of the industrials see buying, Win Casino, stuff like that. Okay. What happened was you had some Fed speak today, you had Bostic come out, and a lot of people saying it wasn't dovish. It was dovish compared to what everybody is concerned about. And Bostic pretty much reiterated that he feels the Fed should be content with quarter point rate hikes, okay, for the time being, and stick to it until inflation softens, okay. And like I said, the market is likely as a whole going to be okay with that, all right. And another thing we've been seeing that out of our credit spreads. I'm going to get to that in a second. So, but anyway, let's rewind to this. So we came into the week with a setup that we had this little drift of selling lower. Okay, the breadth hasn't been awful. They're not selling everything. There hasn't been enough of a washout yet for us to get excited about a multiple day, multiple week squeeze at the index level. Okay, but we are approaching a point where we can see something like this. And if you remember, we were looking back on some of these charts, so you get an idea of what it may look like, right? Something similar to this. You get this drift, okay? And even though it doesn't lead to potentially a strong and broad, lengthy bear market rally or squeeze, you get a couple days. Sometimes it could be just one day and it's a pretty sizable squeeze. But you get to that point, and what, in other words, what's pointing to that? A few things, right? Kind of what the opposite of what we're seeing into the highs. And we could pull up SPX is a little bit cleaner, okay? All right, so SPX here, it was the opposite, right? We ran into this upside niner exhaustion signal, which in simple English means we should see buyers start to get tired there, right? And it'll be a sign of at least a pause. And here, we're running into a downside niner. Okay, again, you can see the shading, the green here, right? And the red here. Okay. In where sellers possibly may show us signs that they're getting tired. Okay. So that's the lead up and into this week in what we were looking out for. So yesterday, I posted this last night just to reiterate, a couple things that are going on and what I personally think we should pay attention to determine whether it's just a squeeze for the day. Okay. So in other words, what we saw today and that's it, right? We see a lot of those. Or can it lead to something like this I showed you a second ago, right? This here. Okay. Multi-day squeeze, something a lot bigger than just, one of these quick squeezes and then they evaporate, right? So here are the couple of things we were looking at. Sweepers are doing buying. They're doing buying in those inflationary names. That's always a good sign, okay? Always a good sign when you see buying as opposed to no buying at all. And obviously bear sweepers grabbing the ball, drilling things to the downside. All right, so that's a promising sign. Are those downside niners? We started to see them. Several names, right? Again, just exhaustion signals, right? Several high beta names, several names, different groups. You had SPX that actually confirmed. You had the futures, ES, NASDAQ, and the rest of them. I think they got wiped out today. But again, off last night's note, it was the following day. So you had several exhaustion signals out there potentially chewing up a squeeze, okay? Some of the other things to keep an eye on that can get in the way of a squeeze, these yields, right? And we talk about like the flow show, Bova's Hartnett, how he changed this tune recently. And the reason why he changed this tune is he's more concerned about this in where he don't think it's worth looking for upside until equities price this in. So what he's worried about here, let me pull up a daily here. You can see it probably better. He's looking more on the 10-year here. Okay. Why? What was this? What's this stuff here? What is that? Where are the numbers on here? Oh, Oh, it's over here. All right. So he's looking at here, these yields breaking out, ultimately weighing on risk assets. Okay. So his rationale is if you get a breakout in yields, right, and it's the 10-year he's worried about, you got the 2-year here that already has broken out to new highs. The 10-year longer term, right, the back end hasn't really ripped as hard to the upside. And now that's starting to see upside, and that's got him concerned. All right. So one of the things that can get in the way from that multi-day squeeze, can get in the way, hinder it, would be if yields just continue to push higher. Okay. And you're going to have a lot of the market that's going to be heavy. Okay. Credit default swaps, right? Something we want to pay attention to. Why? We've been talking about it, right? Swaps and spreads. What that tells us is that if they're not reacting, if credit spreads aren't widening out, okay, which tells us that the health of the economy is deteriorating in simple English, okay? If credit spreads and swaps remain subdued in a sense, that's a green light to do stock picking. That's simple, okay? You don't want to necessarily play the indexes unless you have other things lined up. But what it tells you is there's likely buyers are going to find things to buy, okay? Because the economy's resilient and remaining okay for now, okay? It's more of just that higher rate trade, and that stuff will be affected. So that's what the swaps and spreads that we've been paying attention to, that's what they tell us, okay? And I'll get into how all these things reacted today so you can determine and make your own decisions of what you think are going forward, okay? And that's what I wrote here. Spreads and swaps not showing any economic concern. It's been more about that stinky inflation trade on non-economic deterioration, right? So we usually see buyers step in some of the new regime names, and that's what we've been seeing, okay? And this was the bottom line here going into today. Not only do we want to see sweepers do some buying, obviously, right? Because sweepers on an intraday basis, they mean momentum, okay? They create momentum. So that's one thing when we're looking for a squeeze we want to pay attention to, obviously. But we would also like to see that buying and that squeeze that occurs result in credit leading, okay? And what I mean by that, simply looking, and if you don't have to be on a Bloomberg terminal, you can look at the simple ETFs that we've been looking at here, right? Your LQDs, HYG, JNK of the world. If you look at these things on a daily, okay, they look pretty ugly here recently, okay? And what you'll realize is a lot of times the healthier rallies, credit will lead. And sometimes you'll see credit tip you off to a rally that has more room to the upside, okay? So again, we wanted to see sweepers step in, do some buying, right? Create momentum, get the ball rolling, and then ultimately, and I think that was the beauty of this setup, right? And this is the point I was trying to make to you guys, because a lot of people were asking, all right, there's a niner, should I buy now? What should I do? Are we going on? I think the beauty of this setup was you can try to time this intraday and then make a decision on whether you like what you see and you feel this rally may have more legs. Okay, that was the point I was trying to get through to you guys, that you don't need to front run anything, right? You don't need to anticipate anything here, okay? And very simply put, today, right, whether it was Boston comments, you're playing the overall market, like T said, you're playing QQQ, or you're playing names. I got lucky today. I caught that GitLab. By the way, did anybody else catch GitLab today? If I caught it, somebody had to catch it out there. No? Nobody caught GitLab? There's no way that I caught GitLab and nobody else caught it. Wow, that never happens. You know, yeah, no way. I'm gonna star my ass. If I caught a move like that, it's usually everybody and their mother caught it. But again, the point I'm making is whether it was the indexes or you're playing a couple names and you participated in the squeeze today, then you can look at the whole bull of wax and determine whether you feel there's enough conviction there for a multi-day move. Again, what we're talking about here, and I want to stress the point, okay, is let me just go to this and okay. What we're looking for, and there obviously could be more than that, but what we're looking for is at best something. Where'd it go? Oh, at best something like this. Okay. Now, why do I say at best something like this and nothing more? Is because this pullback, right? A couple of things. You have some heavy supply that's come in, right? CTAs, hedge funds, de-risking. You have a lot of taking down of exposure that we've discussed ad nauseum the last few weeks. Okay, so that's kind of overhead supply on top of us. The other thing is this pullback there hasn't been high correlation. There hasn't been enough getting whacked. There are places to hide. And a lot of times in order to get that sustained squeezed higher, especially if we're still in a bear market, okay, and not in a new bull market, you usually need that. And again, pitches do a lot better than I can never explain these things the way I want them. They're in my head, but I can never, the way I explain it sounds ridiculous. This is what I'm talking about. And we talked about this again a week ago. Okay. Well, we kind of want to see there's something better than this. Where's the other one? We kind of want to see a healthy enough of a washout. I was looking for the ones that you guys like, the RSI ones too. But see, you get these squeezes here, right? When you don't get enough of a washout. But a lot of times in a bear market, they're short-lived, right? The strongest moves, that's when they catch a lot of people off guard on those sides. Okay, so we don't have that yet. Even on a short-term basis, because of not even the rotation, it's not necessarily rotation, but because of the selective buying out there, again, places to hide, there hasn't been enough of a washout, in my opinion, to look for anything more than just a short-term squeeze. Okay, so that's the reason why I'm talking about just this and nothing more, at least right now, anyway. Okay, so let's see. We get some sweeper activity. Okay, sweepers were buying even before Bostic. Like I said yesterday, you guys could tell off the top bet list, right, that we post every night, there was buying. Okay, no matter what. All right. So we got some sweeper activity. We got the squeeze. Okay, markets bounced nice thanks to Bostic and whatever else contributed. What did credit do? Okay, let's say ES up 30. Okay, these things were down, right? Credit was kind of weak for most of the morning and then rebounded and ended flat. So ideally, that's not what I want to see, right? What I wanted to see is credit lead in a sense, okay? And then equities play catch up, right? And credit confirming that move. Here we had equities basically squeeze off Bostic, take the lead, and credit rebounded in a sense, okay? And this is what I was talking about late in the room. The one thing that did occur that throws me off a bit, otherwise I would just, spit on this completely and say we'll get a better entry, was that, and you'll see when the credit default swaps update tonight, bond spreads and swaps did lead. Okay, again, I don't know if you guys have been paying attention to this intraday. I was posting it all day long. This firmed up even before Bostic and the equity move. It was going completely divergent, right? So, and this is what the swap charts kind of going to look like tonight on the daily. Okay, so this, even before equity squeezed, this looked like this. You know, so that's the one thing that's throwing me off. And again, if I could dumb it down into some simple English, the way we like to all comprehend this stuff, right? The signal that tells us that the Fed is not rigging the game, okay, and we have a green light to do some stock picking especially in the new regime names, that flashed bullish all day long today, even without credit participating much in the rally. So, again, my opinion, and I do what I'm telling you guys, because credit conditions as a whole lagged this rally, I did not hold anything overnight. Okay? I did not hold anything. And yeah, well, you guys probably say, well, yeah, we know that. You've been dating. And you're right. But again, if you ask me, right, if this was confirmation that I was looking for a multi-day move, like we were just looking at the chart, I don't think we saw that, the confirmation we wanted to see. It may show up tomorrow, right? Or may show up early next week. I think we get another crack at it. And again, I'm just talking about a pretty healthy squeeze, nothing more than that. Okay. And the reason why you want credit always, like if you look at prior lows and bear markets and all, credit always led off the lows, always, and even off the highs, right? We were talking about this recently. Like, this rolled over, okay? This topped out and rolled over long before the markets did. It's a leading indicator. So again, I'm micromanaging things here down to intraday. But those are the things, those are some of the clues I like to see that tell me whether it's worth taking the risk and seeing more upside as far as a squeeze is concerned. All right. But on that note, names, okay, because again, we have the green light to play off the right action and play the right names. You have that green light in names. You understand? We're talking about the indexes now. And I know 9 out of 10 of you focus primarily on the indexes. Whether you say you do or not, if you're not focused on the actual index, you're focused on some of the high beta names that you really would like the index to move for you, to bump up the odds that you can cash a ticket. All right, so anybody have any questions on what I try to explain here, and hopefully it didn't confuse you as far as this checklist is concerned? Oh, here, this is it. Hold on, I just remembered. This is washout indicators. Okay, so these are some of like the major washout indicators we look at, right? You can see we're starting to move a little bit here, but yeah, nowhere near where a lot of the selling usually dries up, right? What is the new indicator? There's no new indicator. I don't have any new indicator. Where? Oh, which one? This? This is the same one that's on here. I just moved it over. Same thing. I just moved it over into a box, so I don't take up too much of the screen. Yeah. All right. So, that's, it's not to say that we can't rally, okay, without a washout significant enough like this. Okay. But when you're in a bear market, and it's as difficult as it is to trade in a bear market, when you're looking to play the indexes, right? And we talked about the pain trade, what the pain trade has been and likely will continue to be, right? What we've been seeing, everybody's playing crash or everybody's playing new bull market. Nobody's playing what we've been seeing for the past 7 months. Okay. And when you're in that type of environment, if you're going to make a decent bet on the indexes, you have to look to play them off extremes. Did you guys see the McElliott interview on Bloomberg? I think that was a classic. The one just the other day, I tweeted out the link to. Did you hear what he said? All the smart money that he follows, what they're doing, they park in high yield instruments until the setup is there off an extreme, and that's it. They want nothing to do with the in between, nothing. And he thinks that's why you see a lot of death out there in the price action. Okay, because again, for us, it may not be worth it, but when you're managing decent sized money, right? You're in a tough market, and now you're going to get paid to sit in cash. Okay, what they're doing is they're looking for the extremes, exactly what we talk about on this webinar continuously, right? What we're looking for. They're waiting for those extremes, and while they wait, instead of trying to trade themselves to death, they park in a high yield instrument and they make some money while they're sitting patiently, right? And then they get aggressive at the extremes. So what they've done, they basically faded this move, right? They faded this move off the highs here. Right? So they faded this, and now they're not trading this. You know what I mean? They're not looking to trade this. What they're looking for is the complete opposite now. They're looking for CTAs to go from all in to heavy short, right? They're looking for hedge funds to go from net long to net short. And that's what they wait for, wherever it may be. It may come, without us even trading that much lower. But they are waiting for, it's all about positioning. They are waiting for that and only that. Otherwise, it's not worth them to, swing the bat for that. Again, that's them, right? That's them. But it gives you an idea of, that's kind of what we've been talking about for a while now, right? We for the indexes, right? And for that larger move of things, even if you're going to play names in the sense where you can get a little more aggressive, that's at that all sides extreme that we look for. And while we wait for that, you kind of want to play tactically in names and try to stay away from catching the big trade on the indexes. Because see, look what happens here now, right? The same people who were short here and got run over, now we're getting excited a little bit here on the short side, right? And then they're going to get run over again. You know what I mean? And that's kind of what we're looking to try to take advantage of. Okay? You get a bink, 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 couple day move, even if that fades eventually. People who are shorting here, right? This is exactly what they do. They start shorting here, right? They see green on their shorts, and then all it takes is book. Good night. There goes their profitable short. That's the problem with that trade there. You may be up on it, but if you don't cash it in before that happens, you're done. Where, on the flip side, what we're looking for, is kind of that setup that even if you're early could lead to something bigger like that. So that's the story, right? That's the story right there. I think we get another crack at even that couple day trade. I think, again, what I'm hoping for here is we bump around a little bit, maybe even if we come down a little bit lower, okay? But when we do see a snapback intraday, you're going to see credit lead. All the boxes are going to be checked for a multi-day squeeze. So another article today talking about how they are taking 5% interest bond guarantee, no risk to principal, and using 5% interest. Yeah, I saw that. Actually. I saw that. Risk-free, right? I saw that. I saw that people are raising money from investors for that trade. Give me money, I'll park it, get interest, and then the interest, I'm going to roll the dice on zero expiration kit. Yeah, I mean, that's what they're doing. Crazy. It is crazy. But, we're in limbo, right? We're in limbo now where, the Fed is trying to tackle inflation. They're raising rates, and nobody really knows, people have opinions and, they may have conviction behind their opinion, but nobody knows what the outcome of this is, right? I know people who have just as much conviction about, oh, this only ends one way, the Fed's going to break something, then they're going to cut rates, and then, right? I know that crowd, and on the total opposite side of that trade, people have just as much conviction in, no, inflation is going to remain sticky, the Fed is going to remain high, this is a new regime, this is different, And in reality, nobody knows because, this is new. It's new. It's a new thing, right? Until the Fed breaks something, this is new. This is new. Okay. What we do know, right, is that the Fed was rigging the game up until October. Okay, flat out manipulating risk assets lower. They wanted risk assets lower. That was their goal. That changed in October, hence the October lows, okay, and has remained that way since to this day. To this day, okay? Again, in the future, the Fed may need to change because inflation it remains perky and they need to rig the game again. But right now, the Fed is just as concerned, again, their actions rather than words, they're just as concerned about breaking the economy than they are inflation at this moment right now. Yeah, nobody, it's impossible. Even, the Fed tells you they don't even know. You know what I mean? Nobody knows how this plays out. How the hell? You can't figure this stuff out. And we're not going to try to either. We're not going to try to. Eventually, the smarter money out there will have it figured out ahead of everybody else. And we're likely going to see that we're going to see signs of that in the price action. You're going to see signs of that in the flow. You're going to see signs of that. Yeah, I asked GBT to pick me ball games. Can't do any worse than that, Sahil. So might as well ask him to predict the market. Worse than me in bowl games, that chat BTI. 7-0 I started to tease me, get me all riled up. And then I think it lost like, honestly, probably 9 out of the next 12 down the toilet bowl. Just as I got excited. Yeah, horrible. So anybody have any questions? So again, the way I'm looking at things now, okay, and again, I got lucky because of GitLab today. Otherwise, I probably am more aggravated at it today. If you take GitLab out of the equation, the other things I played, I made a little bit of money on some of them, but the God's honest truth, some of the stuff I played this morning frustrated the hell out of me. Didn't move. Didn't move because there was no momentum in the market. But I think we get another crack at it, and I think you're going to get you're going to reach another crossroads here where you can make a decision whether you want to hold it for, another day or so, a move, if you think it's worth it or not. Yeah, I'm watching spring training, Jared, as we speak every day. Feeding, I'm already feeding for it. NPD. Yeah, the reason why NPD, I haven't really spoke about it or posted it much is because of all the shenanigans in option. I can't. Dan, you guys put the call. I've been using put the call, all sorts of put the call ratios my whole entire career, and forget about the zero expiration shit. the R blocks on top of that have thrown everything off. Yeah, so now luckily I'm watching the flow all day long. So I know when those R blocks come into play. You know what I mean? Otherwise, it's completely useless. So, if I see a put the call that spikes without the R block trades coming in, has a little more, has some credibility compared to if they are coming in. I mean, it's that simple. And honestly, it ruined a decent setup for us. Again, there were other things there, but you had some put the call spikes that you really couldn't trust because of all the crap going on. You couldn't trust. You can see them here on this chart. This one, I don't trust this one. This one here. A couple of the others were legit, but definitely not that big spike. That I remember those R blocks whistling in at that time. So that's the problem. You got to take the put the call sentiment that we're used to looking at for ages on a day-by-day basis. As stupid as that sounds, honestly, you got to look at it day by day. Day by day. There's no other way. You got to know what's going on in the flow to have an idea of what it may mean, because otherwise you have no clue. You have no clue. So that's why the NPD, if you chart the NPD, it looks like, you got to see what it looks like on a chart. What we're talking about is the net put delta on SPX. It's a disaster. It's literally, it goes from one extreme to the other almost on a day-to-day basis. So that's why I haven't really spoken about it much. That's what it looks like. GD. One extreme to the other every day. I think I gotta check it out. I think Squeeze Metrics updated theirs to try to clean it up a little bit from that, or they're working on it. But yeah, it got really messed up. But that's all part of the game. You know what I mean? Happens. What are you gonna do? I couldn't get aggressive because the 10-year yields in hard net. Yeah. Oh yeah, Ashley. There's no reason, again, for especially the indexes to get aggressive. Now, again, what do you mean by aggressive? Everybody has a different definition of aggressive. Okay. And your definition of aggressive means you go put on size or put on a basket and look to swing trade it here. No, you don't want to do that. Definitely don't want to do that. But if you, exactly what we've been talking about up to this point, if you want to put on an S&P 500 or a QQQ bet, buying into flat market early or weakness early and then holding for a day or two of a squeeze, why not? I don't see any reason not to do that here. Yeah, especially if you get credit confirming the move. Like here, this is why I like to show you pictures, guys. Like look, and this is what I did. And I don't mean this in an arrogant way, by no means. You guys know I'm not an arrogant guy, but if you can, the flow notes, I try to keep them short most of the times, but try to just at the end of the day, at night or early morning, take a look, see if I posted anything, because I try to share what's on my mind if I think it's important. So this is this is from a couple of days ago. So this is what I was trying to prepare you guys, at best, what I think we can possibly see here. Well, thank you, Jared. You know what I mean? This circle is a little fugazi. This is what I was pointing at here. All right. So you see what I'm talking about here? Look, drip, 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 niner. Okay. But same thing that Ashley pointing out, the setup wasn't great because look, you came up from a horrible all-in high and you had work to do. Okay. So this wasn't something we're going to see a full-fledged bear market rally over, right? You need more work to do. But this, see, this lasted what? 1, 2, 3 days, and then whoop, reversed it in 1 day. Okay, but if you're looking here, right, and you want to put on a bet on the S&P 500 or the Qs or whatever index you want to play, or names, whatever it is, right? You're going to trade something more than likely. Are you going to wait for all this to do that? Probably not. So if you're going to trade something, that's probably what you want to look to play. Okay, and then same thing here, right? Look, drip, 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 9er low. This you had a better setup, couple days squeeze, but you see this? That was ultimately what set this off. You know? So that's what I'm talking about. This right now, right? This. I took everything off today, T. Everything. And honestly, I didn't have much going into the close. I didn't have much going into the close. And I'm being dead straight with you. I'm not going to lie and tell you I held everything from this morning. I didn't. A couple of things I played this morning. What were they? NEE. I raised my stop. They pulled back. I got stopped out, and then it actually pushed higher after that. Something else I played in the morning didn't move much. The stuff I played in the morning didn't move much, and I wasn't going into that Bostic squeeze. The one I got lucky with was GitLab. And I didn't, there was no thought process. It straight out ripped off news. I don't even know, you guys know what the news was? It didn't matter to me, Yeah, and honestly, I wouldn't have swung this anyway, because they were March calls. And if I'm not mistaken, I don't know the exact date, but I think they report in March. I don't know if it catches earnings. Yeah, I think right? Does it catch earnings? I'm not 100%. Let me see. What's Trading View? There were a couple names that I don't know. This says March 14th. I think on the CBOE, I think it's in March 18th. Yeah. But it's okay to day trade these. You know what I mean? Swing them is a different story. Yeah, I played the equity. No, I played the equity. I day trade all equity. Because for what I do, it's a lot easier to handle. Where is the trade on the GitLab here? It was pretty big for GitLab. You don't see that type of size. But like T saying, it's probably, I'm sure it has to do with earnings. Unless that guy or gal knew that this news was coming, which is very possible. Where is it here? Here was the news. Rally, new company announced a price increase for GitLab Premium. I guess that was the news. See, this is whatever. Mid-March, I was showing earnings. I don't know the date. Where's the bet? Oh, I know why. Hold on. I just don't want anybody getting caught in the earnings, especially, if you got to move to take profit. Oh, this was the bet here. 400 grand. Really suspicious timing, he says. It's crazy. Yeah. There's a lot of, the problem is there's a lot of crap flow getting in the way, but there's a lot of suspicious stuff out there. A lot of suspicious stuff, especially on the put side. You get these, oh, you know what was suspicious? This one, ZTO. You know what's funny? That these guys, they do this all the time. They buy puts. Oh, it's like a couple days before, not even the day of or day before. They buy puts, and then they put out a short piece. You realize that? There was this one too, remember? You telling me there's not insider trading going on in these things? Come on. AI up 18%. Where's that? Let's see. 25. That's still in no man's land. Where is it? Right here. You know what's funny? Remember the zigzag? That's what you got going on here. Yeah. But you're on the bottom of the zigzag. So that, oh, you guys played it? Nice, Oscar. So that's the story. You want to talk? I got to update the top bet list, but there's been a lot of individual respectable bets out there. They're not coming after anything like we usually like to see. Like the last name they came after was this Cube. Okay. This is last week. There was another, oh, this one, they came after a couple days. FTI, right? So you don't want to talk about that. Rapid fire, they really want it, and the action stands out type of flow. Other than that, we're seeing outside of energy, there's been some energy names, really like just isolated bets, like BHP caught a bet. Wing caught another bull bet. Yeah, exactly, Praveen. Those are good calls. Those were other two names that they really came after. EURN, Obi-Wan Kenobi. All right, this Obi-Wan Kenobi was, I believe it or not, I held it. I told you guys that I held this a day extra. The equity though. I really like the flow in the Obi-Wan Kenobi. Yeah, a lot of energy names. I like this one, right? If you remember, we were talking about this name because all the energy names that caught action, this was one of the newer names catching action. And they're hitting it up again here. And this thing's looking to break out PBF. This is a really quiet, nice looking energy name with flow. Look at the numbers too. Jesus Christ, right? A lot of these energy names, $5 a share in the quarter, for Christ's sake. But you see, like this is, I think this is where the opportunity is in energy. There, you got to be a little more selective. It's not just throw a dart anymore. You know, it's not just throw a dart. TXT, what was wrong? That was a nice sweep, right? That's a perfect point I was trying to make. One sweep, good looking name. TXT here. What is that? What these are? Private jets, T? Christ almighty. It's a gold mine, this stock, huh? Wow. This looks great. So that, see, like as long as our Fed rigging signal is on green, okay, you like these names, you like the spots, you got the green light to play them. You know what I mean? You got the green light to play them. Okay? Because these are the things that are going to do well in this type of environment. You know, these are the ones that are going to do well. Ideal situation, you can buy them I was just going to say, T, for a swing, you want to try to buy them at ideal spots or even preferably weakness, because that's the key is that these names are going to catch bids when they sell off. That's where the money's going. You understand? So, and the beauty is if you do see a sell-off, okay, it doesn't have to catch flow that day, but if you're watching a name like a TXT and it does one of these, right? You know, that's kind of ideal right there, right? Because again, that's where buyers are stepping into these things. You know, what you want to try to stay away from, even though these are the stocks in play, is top ticking off a move like this. I'll give you an example of it. And it's frustrating, you know, like this. Okay, I like the flow in it, right? They came back-to-back days. It caught some action even prior to that. But like, how am I going to buy this thing like this? Right? So you know what I'm talking about, T. This is the stuff, you know, even though the action's decent, unless you love the name, right? Maybe there are no sellers for a reason. But this is the stuff that normal pullback, and if you got calls, it's going to sting a bit, even if it does eventually go to new highs. But the name you just mentioned, T, that court action today, that's a nice setup right there. That's a nice setup. Like, look, no sellers in this thing, right? Boom, rip, upside niner. Look at this. You couldn't draw it up any better. You couldn't draw it up any better. And, you scroll back on the chart here and look what you got. Right? Look at that nice consolidation. Looks good. Looks good. And the other thing I got to remind myself a lot of times in these names, they're not the stocks that we're used to playing in bull markets. That SPACs that we saw doubles in 2 days. These things, they go up, they pull back a little bit, then they go up again. They're normal trading environment type stocks. You don't always, like, you got to sit through a little back and fill consolidation, and then you get paid like in a couple days when they do this. It's almost like you got to be in it. MTW, baby Caterpillar, right? That's another one in favor. Oh my God, baby Caterpillar. I told you, Praveen, I saw this thing go from wherever $6 to 150. Yeah, back here. I told you guys the story. Oh no, even further back here, weekly. Watch this. That's where we nicknamed it Baby Caterpillar. Here, you see it? Manitowoc. Interestingly enough, right before the 2008 debacle, in 2007, these type of names were on fire. Look, and then look at 2008. Did you? Wow, Manitowoc. Yeah, and look at this stuff, right? Nobody's been paying attention to this thing for years. You look at it now, and you're like, oh my God, what a rip. You stroll back on this chart, this thing's been out of favor for ages. But yeah, these are, there were quite a few names over the last few days, especially that caught action like this. Here's another energy name I know you guys like, right? Valero. They all look decent. SI, was that? I don't mean to laugh at anybody losing money, but this is hysterical, this one. This is hysterical. Hysterical. You know how many people try to buy this thing down here, Robert? I mean, I'm talking about, again, reputable people. Bill Miller was on CNBC pumping this thing. I couldn't get over it. He's pumping this thing like it's he found a diamond in the rough. I think this is why the financials as a group were shaky today. No? Or was there something else? I saw a lot of these like regional banks that were catching put action that never catch put action. I don't know if they're tied to this. Right? Remember the one in the room I brought up? P. What's that one with a P? You guys remember which one, the symbol of that one that I brought up this afternoon that's been seeing put action? Oh, VLY, good call. Like, what's that about? Why are they buying puts in this? Valley National. No, not PSTG. It's like PSNY or something like that. P or PBNY. I keep forgetting this damn symbol. Is it PCNY? SBNY. That's it. Like, what's going on with this? Oh, it is related to SI. See? See what I mean? Thank you, Siri. So it is related to SI. You're telling me these banks got involved in FTX and crypto? That's what's going on? Jesus Christ. Jesus Christ. Yeah, so there's like, some put buying, there's been put buying in this SBNY for a while now. But like, you guys just brought up the VLW today, Valley National Bancorp. Yeah, delaying 10Ks. I saw that. Jeez. So I don't know if that had an effect on the banks, and the banks. You saw the Goldman Prime update. They're selling the banks. You finally got a pull in some of the studs here. Well, here's your pull. They look good. Listen, if you like Morgan Stanley already, you see a little action, you just buy Morgan Stanley. I mean, it's a stud. You would like to see some sweeper activity confirm that this cooling off period's over with. Me anyway. But you got hedge funds running away from the banks like they got the plague. Running away. RNG, there were cheap lottos. It caught some chatter right after that series. I don't know if you saw it. There was an article that I think it was Twilio and RNG could be takeover targets, something to that effect. Intel, I'm not a big fan of. We've seen some put action in Intel. K-Web, the whole China trade is getting interesting. You know what I mean? This whole China trade, because again, T, you remember we talked about this a lot. You had a lot of crowding in here. And I mean, look, you've had a nice washout. I still think it hangs around here a little bit. And you'll get an opportunity. I think you get a couple opportunities, but I would, that's where I would look to take advantage. China PMI again? Didn't the PMI just come out the other day? Or was that a different number? SQ and AMD, they had bounce action. I believe it or not, I'm not a big fan of these names. I day traded SQ today. I scalped it. AMD, I missed. I wasn't around off that news. They look okay. They look okay. What concerns, what I'm worried about in these names, they're in hockey stick formation, right? And if like the big worry is about rates, that's going to get in the way in these things. Now they may buy weakness because all the damage has been done, so you may want to look to buy weakness if it shows up, but you got to be careful chasing strength in these things. These are the stuff, these are the names that if this market remains rocky, these are the stuff that people are going to get hit in. Yeah, AMD, you had the news today, You had the news today. But I would listen. I know like you could chase momentum and scalp it. I'm talking outside scalps. I would look to buy weakness in these names for rentals. That's what I would look to do. I think this is the tough part of the market. JPM says hedge funds playing China via Europe. China, yeah. They piled into Europe. But look, Ashley, it's old news now. Like, look, we've been looking at these charts for how long now, right? That's what I mean. When you start seeing everybody talk about it, look at it. Who do you think was doing all this? They were flooding into this, So I give you an example, and this is kind of what Goldman was hinting at, okay? You get a negative headline here, okay, that really gets that CTA crowd selling long exposure. This is where the risk is. This is where the risk is because look at the run you've had. Yeah, they thought that Europe was going out of business this winter. So again, these are the big picture trades that are probably in vogue for a while. You could definitely make that argument, but this is you're not early here anymore now. You know what I mean? You're not early here. So you got some risk. You probably, in my opinion, you want to see a breather there. In I'm talking about these indexes now. You're better off possibly sticking with names that have already possibly come in or been consolidating. But a lot of these things had big rips. Like you see this thing ripped again. Look at Caterpillar, a little bit, bing, bing, bing. So that this is what they're buying while the market's dead and not doing a thing, We'll see how long this lasts. I have no idea. It's not going to last forever, but as long as the economy remains intact and rates are elevated, they're going to buy those things. It's when you see rates start caving in and the economy start deteriorating, that's when these things are going to get lumped up. By the way, you guys ready for Hartnett tonight? I think he's going to he might force us into bunkers tonight with his rhetoric. I don't know. I'm scared to read him, T. I don't want to get too bared up. But I obviously have to, because he keeps you abreast of a lot of important things. I've been content with this market, this type of market we've been in. He's gonna spook me out of everything. Yeah, true. You're right. Yeah, he's gonna, this guy's gonna make me take a vacation, PJ. The way he's going. The last couple of weeks, right? T can vouch. I'm not the only one spooked. He's got, forget it. And basically, this ends in all-out Armageddon. He's talking about Japan-style YCC. You're going to see at the bottom. He's now the most followed guy by everyone. Yeah, well, you know what it is? Yeah, he's been around forever, but not many people, he's sharp. The guy's sharp. But I'll tell you what, we talk about pain trade. Don't let anybody fool you. This has been the pain trade. Even the bears, like you see them on FinTwit, they keep pumping out the same stuff. Like, they probably don't have a trade on. You know what I mean? Because they talk about the same exact, like they pump out the same bearish, oh, this is a disaster, it's going to blow up, that they've been saying since the summer. And there's no trade in that. You know what I mean? There's no trade in that. Like the same people who were calling for, the death of everything in the summer, they're still saying the same thing here. Now, granted, it may happen at some point, but there's no trade in that here, So that's gonna wash out a lot of people just at itself without even the market, really selling off or anything. Yeah, Dan, I'm telling you, bear markets, they're tougher on bears. And like, if you're bearish, you gotta be kicking yourself, right? You almost had everything you could possibly want. And look where you are here. We're still at like 4,000. Space is what I do all day in the steam room. Yeah, pretty much. What are you trying to say? I'm a loser? See? What are you trying to imply by that statement right there? Oh, I thought you're trying to tell me to get a life or something. Yeah, during the day, that's what I'm doing. Like basically, I got my screens on like this, and people hear me talking to myself. Sometimes I'm talking to my boy, but a lot of times I'm talking to myself, just so everybody knows. No, I'm all by myself. I'm all by myself. Right, you'll hear my dog snore, T. My dogs are around. You know what I mean? They're nice and relaxing. When the market's not doing anything, you hear Daisy snoring in the background. It calms you sometimes, you know? Yeah, let me ask you guys about spaces, first of all, while I have you here. I've been meaning to ask you about spaces um, for a while, and I keep forgetting. The only thing, here's my problem with spaces. I can only do spaces from my phone. That can't be right. I can only do it from my cell phone. How? Well, I have you here. Let me, because I don't know what the hell I'm doing. Hold on. Look. All right. Let's say here, right? Boom. I want to do spaces. Where do I go? Oh, I got to download something else. Is that what you're saying? Oh, so it's like an extra thing you got to get to an app or something? You could get it. I can get an app on the desktop. What is this? Let me see here. He's got directions. Oh, all right. I'll take a peek at it on this. The creative space also. Yeah. See this? I don't have this on the desktop here. I'll try to do some research. I don't know what I'm. Let me open it. I'll look at these when I get off of here. Yeah. See that mic here? Look, if I click on this, look, that option's not here. I got homework. I tried to figure this out a couple of weeks ago. Right, this isn't hard net. I got homework you guys gave me. I tried to figure this out a couple of weeks ago. I couldn't figure it out. Here's the CTA selling Goldman Rubner. Rubner still thinks we have more to do here. So pretty much what we were talking about, Rubner from Goldman is talking about. He thinks we're about 60% through this process. And then he thinks a window opens up for a trade, for some bullishness. Yeah, it slows down. Yeah. And you know that's right, because you can see even on, you see the TD CTA charts. We're in the thick of things. You know, like look, TD already flipped to short already. Doesn't take long. Let me move this out of the way. What the hell? Oh, these are all of them. Here, down here. So see? And look where we are now. Boop. Boop. You can, I just read that too. You can do it on mobile only. Later, PJ. Have a good night. I'll do a little research. I'll try to figure it out. But that was the problem I had, is I could only, and I thought I could do it on the iPad too, spaces. I can't even do it on the iPad for some reason. Just my phone? It doesn't make much sense. There's got to be something. I'll look into it a little bit more. I got lazy. Here's the other thing here. See that? So we've been in the middle of this here. That's why the market feels like shit. You know, so you know, to get to here, we got some work to do. You know what I mean? But again, we could squeeze along the way. You know, like, see these? And chop. You can do it too. Later, Kate. What do I think about tons of sweeping energy names? Yeah, I think, again, our definition of the smart money out there, there's cash on the sidelines. And as long as the economy remains intact, right? As long as we see this again, our Q, the LQDIEF or the swaps this here, right? As long as we I've been posting a lot on credit recently. Yeah, so this, as long as we see this hanging in there, right? Which is this basically. Okay, so as long as these stay under wraps and we don't get this breaking out, which is telling us that credit spreads are widening out, blowing out, if that happens, okay, that means a higher probability of default in credit. Okay, so it's telling you a deterioration in the fundamentals of the economy in companies. Okay, so as long as the economy remains intact, and it has, right, jobs, more numbers came out today, it's ridiculous. The money on the sidelines, mutual funds, there's a pile of money out there, piles. They're going to find things that can do okay in this time, and in energy is right up there. Now again, it's going to be more selective, I think, in energy because it's had a huge move last year. But you see it, right? You got fund buying. A lot of these names we're seeing flows. These are not specs, playing. These are funds taking positions in these things. Yeah, a lot more, good call, Ed, a lot more in general of buying in individual names, stock picking, than macro and index bets. You're 100% right. And again, Ed, right? Listen, I'm not saying we know it all, but this is what we've been talking about, from September. You know what I mean? It's very common when you get to this stage of a bear market. Everything goes up and down together, and there's not many places to hide. Okay. Then now we've reached a point where the economy is not breaking. Okay. And inflation and rates remain elevated. So now they're gonna do some stock picking in here instead of chasing high beta names and buying the indexes. So what you're seeing them sell the indexes, and like Ed's saying, focus on pockets and individual names. And that's what they're doing. And, how long can that last? Only the market gods know. Honest. I have no idea. It can last. You know what I mean? It can last a while. It can give the impression that you're in a whole new bull market. You know what I mean? Because you're getting this choppy upward bias type thing. And in reality, it's still in a bear market, but it's just a phase while they're waiting for one of the two sides to break. Literally, if the Fed breaks something, or the Fed can pull off the miraculous soft landing. Correlation between sectors and stocks. Yeah. There you go. Oh, I think it's from Goldman. I saw this. Yep. So, that's the playbook right now. You know what I mean? That's the playbook until we see these signals flash that it's over. And that's where you're going to see it first. So like Hartnett is thinking the probability of seeing that is a lot higher now because of what's going on in the 10-year. Yeah, correlation lower. Exactly. The correlation's low. So in other words, when this is up here, everything is moving with the indexes, right, Ed? And down here, you get rotation, you get stocks marching to the beat of their own drum. And it's funny because like major bottoms a lot of times will come off these high correlations. Because the rationale behind it is they're selling everything, right? Like everything's bad equally. And obviously that's not the case, but that's showing you signs of panic, right? They're throwing the baby out with the bathwater, right? And honestly, like for us, like if you want that setup again, like the October low type of thing, you want to see a spike in correlation. You want to see a spike in correlation. And that's usually where you find a legitimate low that can set off a pretty nice multi-week rally. So a lot of these lows in this bear market here, you will notice there was a spike in correlation. So good call, Ed. Yeah. That's the reason we've been focusing on names more so than the indexes. The indexes, you got to wait. Again, McElliott, that interview tells you everything you need to know about, how the pros are treating this right now. They don't think it's worth, as far as playing the indices and making macro bets in here. They just don't see it. They don't have the risk reward wise, right? They rather park their money and get 5%. 5% while they wait. So, right, you're managing big money. You try to catch this, or you try to, right, maybe try to play this, but while you're waiting for this, you park your money. Patience. It takes patience. So that's the story. Anybody have anything else to add, or anything we didn't use that we usually go through? I don't know what the hell we looked at today. I'm dizzy. Anybody have any questions regarding the setup? So basically, what we want to see over the next few days, maybe this market squeezes without it, whatever. But what we want to see in the interim, to set up a stronger move, right, is keep an eye on credit and have credit confirm the squeeze, right? And then we can see one of these bad boys here. Uranium, yes. CCJ, they've been buying pretty aggressively. Sahil, yeah, that's a sweet spot, right? If we get them to get aggressively short, that's going to set up something like the October low, but that honestly, that might take a little bit of time unless we get the help of some news, or maybe yields break out. Again, that's Hartnett's concern. Well, Hartnett's looking for what, 3,800, right? I think 3,800 will get a lot of what we want. You'll get enough bearishness, 3,800 on the S&P. Yeah. So C-Train, I would watch the LQDs and the HYGs and all that stuff. And if they're up alongside the indexes, sometimes you'll see them stronger than the indexes. Okay, then I think the rally could have some follow through. Again, shorter term follow through, C-Train. I'm not talking about new up leg, or you know what I mean? Like I was showing out on the chart there, it's going to be a well worthwhile squeeze. In other words, you walk away, it's not going to disappear. If you get credit to confirm. Up to what we've been seeing now, like as opposed to what we've been seeing now. You see what these rallies look like, right? They look like they're going to go, boom, they hit a brick wall, and before you know it, they disappear. CLF, that's another good name. Yep. All those names are, they're working here. The CCJ, you guys know, this thing has been littered with action for a long time now. It's been in consolidation. Maybe you get the breakout here, very possible. I don't know the timing of that. You might have to have some patience. But this name has been littered with buying. Like, put it this way, anytime anybody's bullish uranium, they're going to buy CCJ. It's that simple. That's the go-to equity uranium play. So if you want to make a bet on uranium, it's CCJ. Somebody mentioned CLF. That's another name that's look good. It looks good. It looks good. Right? You've had a big rally. Has definitely shaken out a lot of bulls. And now you're on the right side of this chart, right? The rallies may be slower, but they're buying dips. They're buying dips. And this energy names, they're even underbelly energy names. I know they're not that liquid option wise. Wait a second. What the hell's that symbol now? Liberty, isn't it that? No? Oh yeah, there it is. All right, so here's another one stuck in some consolidation. This is more of an underbelly energy play that we've seen some decent order flow in. See, it was stuck in this chop, trying to lift out of there. Yeah, any quarter sweep today, I day traded it. I got shaken out of it. I could have made more money than what I did today on this thing. Look at it, close at the highs too, right? Son of a bitch. Where the hell did I get shaken out of it? Here or here? I think it was here, maybe. What time is that? I don't remember. It must have been here. I don't know. But yeah, caught a nice sweep. Caught a nice sweep. And you know what I like to spot? Right? That's what I liked about it today. This NEE. But it was an average size bet, nothing huge. Yep, bottom of the range. Bottom of the range. But you got a little bit of everything, right? You got energy, you got if you like uranium, you got uranium, you got underbelly energy, healthcare, if you want to go defensive, ABBV has had some nice action. But you realize something, the majority of tech and growth, you realize how it's all the majority. Sometimes we see outliers, but all short dated, right? Short-term trades, right? Yeah, I saw this name. They've been buying this name. Now, December's, right? Deep in the money December's. But you know what this is? Guarantee you, Robert. A hedge fund, more than likely, who's got a position in the name and they're going deep in the money to utilize some leverage. All the sweeps, for the most part, have been deep in the money with time. I think we've seen even leaps deep in the money. And there was some buying there this morning, too. I think T likes this stock a lot, AEHR. I don't know, what do they do? Is this tech? Medical tech? I don't even know what they do. But yeah, finally had a shakeout there. And look, they bought it right up. Unbelievable. Semiconductor. And the other one's this, right? But this thing too already ran. Look at this, Jesus. SMCI. This is another one they buy on dips. Meta, yeah, they had to deepen the money Novembers, right? That's right. So there's the exception to what I said. Meta was one of the few, right? That caught some quote unquote real buying. Oh my God. That's why, when the Fed's rigging the game, right, we're all over these things. One little sweep in these things, we're jumping on them, right? If they're at a decent spot. There's like not even a thought process behind it. Our problem is we'd be selling them the next day. That's our problem. Right? Believe it or not, this market win, a lot of you guys don't remember markets like this. This is real stock market shit. The guy from Goldman, Garrett, had a note out today. He's like, this market has felt, stocks have felt the most realistic in decades recently, where you got to go under the hood, do some stock picking. You know what I mean? Find names in certain sectors. Some names are doing well, some names are up, some names are down. That's what the stock market's supposed to be like, not the Fed rigging the game and everything goes up, everything moves together, or find the next bubble. But this is the stock pickers market. What it squeezed off AMD, right? Was that the reason people were telling me? Off the AMD news? I don't know what that had to do with it, but yeah, this stock has been doing well. Wait a second. When did wasn't there insider selling and it sold off? That was this? No, that couldn't be. Oh, that was here. Oh, I see what they did here. So people shorting off of that got squeezed here, huh? So tough, these things. I don't know how you guys trade these things in no man's land. I really don't, I really don't. On the short side too. These things are so hard to trade in this type of market. You think you got a clean short here, right? Ready to fill the gap, and then this happens. Now what? You're holding? You know what I mean? Tough, man, tough. Look, these are ulcer trades. At this point in my career, I'm not looking for ulcers anymore. I'm done with that stuff. Yeah, that's what happens here, right here. I saw everybody on Twitter. I told you the earnings and AI was bullshit. I'll short this thing all day. And then bink. Yeah. You're counting your money, you're pounding your chest, and then this happens. Tough, man. Again, I've been in the game a long time, guys. This is hard-earned money in these names right now. And just think of it logically, okay? You see this name? Everybody and their mothers, uncles, fathers, sisters, stepbrother, and father-in-law is trading Tesla right now. You realize that, right? Okay? You realize that? Everybody. Literally every morning I post, as you guys know, the most active lines off the open. The top 20 lines are Tesla right off the open, like it's an index. It has more volume than the S&P 500. How? You know what I mean? You think that's easy money? This thing, you gotta wait for certain spots to have a shot in this thing. Yeah, every day. That's why I see people even following the flow in it for signs. How do you follow the flow in it? There's so many players. You're gonna tell one guy who's buying calls, and this girl's buying puts, and that guy's buying calls, and this girl's buying. It's insanity. Again, it may be fun, you know what I mean? And it's ball games or whatever, like playing the ball games. But you gotta try to isolate certain spots here for trades in these things. You gotta, this is tough. Otherwise, this is tough. These are tough trades. For me personally, like if I'm gonna play these names, and you guys know I'm not big fans of these names anyway, but like if somebody asked me, oh, when should I play these names? I would treat them the way I would treat the indexes. In other words, if the indexes are lined up, then you think Tesla's at a decent spot, can squeeze, then I would play a Tesla. Okay. But I'm warning you that, especially in this type of market, even then, when you have the indexes at your back, you can get screwed in these names in a bear market. And Tesla was a perfect example, right? Here are the October lows in the market. Okay. If you said I was getting aggressive Tesla because the market bottomed, right? And all the indicators are screaming washed out, and the S&P 500 should bottom and rally, the S&P 500 and everything rallied, look what happened to you. You know what I mean? Right. Google's another one. Even Amazon too, I think that happened to. Look at these things. Tough, man. Yeah. So, like, and I just don't like. All right. Let's say here, right? Google, you wanna play for this and get out. That's I understand that, but trying to swing names in these things, I don't. It's just too hard. Too difficult. And I think the main takeaway is that there's just too many hands involved. You know what I mean? Too many hands. Everybody wants to catch big trades in these things. Yeah. That's that's what you got to do. Buy some calls. Buy longer dated calls. Put in what you're willing to risk if you believe in it, and that's it. No, that's what I'm saying. Like Google, it's funny, we pulled up this chart, right? And it caught a little action too. But like, you want to play for a quick bounce out of there, like Max is saying, it's not the worst spot in the world. But you gotta wait for those spots to have a legitimate chance. They're just tough. But see, what would frustrate me the most, Max, out of anything, is if this was the name I bought. I'm bullish, right? I think the market should put in a low because everybody's off sides, right, on the short side. Market should squeeze, and I buy Google. The market squeezes, and Google does this. I'd want to jump out the window. No? Am I wrong? Yeah, but three times is a score. I mean, what are you going to do? Three times, in this market, you take three times all day long. Yeah, you can't complain. But yeah, you just, it takes, you got to be more patient in these names. That's all. You got to be more patient. No one thought market could survive without mega caps. Yeah, well, that's what they said that in 2000, Max, just a cycle. Just a cycle. That's why these names, I don't think they go belly up, obviously. I just think it's going to be tough to make money in these things. If, like, I give you an example. If Google has a shot to go higher, if you think Google has a shot to go higher, that means to me there are probably 100, 200 different other stocks that will have a smoother trip to the upside if that happens. That's my take on it. I kind of like Sahil saying, the only way you could play is if you hold your nose, right? Don't even look at it and buy some time, put in what you're willing to risk and call it a day. This is frustration. That's when I look at this is just frustration, this whole chart. How's Amazon? See, I haven't even looked at this stuff. Same shit, right? Same shit. Look at this. Tough, man. Tough stuff. Yeah, Google off that AI, right? Off that. I thought it was like bullshit news, but what the hell do I know? Definitely could bounce. You know what I mean? It bounces. Look. It's not going straight to zero. And like Max is saying, if anything, at least you got a half decent spot here. It's not the worst spot in the world. But the hell knows. All right, ladies and gents, let's see. Tomorrow's Friday. We got Uber's been good, right? Let me see Uber. Yeah, Uber's been half decent. I mean, you still got a hockey stick pattern, but it's been a lot better. You think it goes higher from here? Doesn't look bad. I mean, it looked worse. Looks better now, right off the numbers. What do you? Oh, what? You're looking for a trade at basically? What, the highs again? Test highs, that sort of thing. The other one got drilled, right? Lift. Oof. That's the other thing with these things. You're going to hold through earnings, right? You know what I mean? Like, look, this thing was looking okay, right? Nice rip up until earnings. Boop. Yeah, I guess it means good stuff for Uber, right? See, me personally, I guess it's more because I'm an equity type, I'm in equities. I've been in, believe it or not, I watch Flow. That's like my main signal for stock picking, but I've been an equity guy my whole life, but in this market, like, I like these no names, Obi-Wan Kenobi or Cube. Like these are the names, like when they catch action, I like to trade. I don't know, they feel cleaner, they feel cleaner. But they don't have the liquidity that the names you're talking about have. Yeah, Uber, that was the off earnings, right? That move here? Where was earnings? Here. Oh no, it was moving before earnings. It doesn't, and you're not concerned this happens again? Well, I guess you'd stop yourself out, right? That's basically how you would play it. Right. Makes sense. Makes sense. And it's, see this, guys, this, it's a problem, especially when this looks like this beforehand, And Uber is not even that bad compared to some of them. You got names they've been piling into, and then you get caught in this. There are sellers. Like you even see the flow, you see rolling constantly of underwater positions, just positions being rolled and rolled and rolled. That's what creates all this agony here. You're gonna need patience, even if you're right here. Oh, I just saw an upgrade. Goldman upgrades Rio to conviction buy. Not a bad looking stock, right? Rio. This is a commodity name. Yeah, well, listen, over time they're going to be companies that survive and thrive. We'll see how that shakes out. Oh, nat gas, right? Let me see Boyle. That's a crazy thing, Boyle. Let me see this thing. Oh my God, you're nuts. Look at this. That's the levered ETF, right? Look at this thing. Crazy. I remember looking at it. There was some flow in this. Boyle. Jesus. God. Went to destroy these things, right? I told you I saw a reputable CNBC was gassing them up. Nat gas trader was pounding the table over here. Pounding. What do you do now? You know what I mean? How do you even bring them on CNBC anymore? Going into the Europe winter. I mean, it was like summertime. Winter, right? It was warmer than the summer. Crazy. Isn't it nuts how it happens like that, though? Right? When everybody's talking about the same trade, how's that work like that? Almost always, too, right? And it's not just stocks or the market, it's everything. It's bowl games, it's life. When everybody's expecting one thing, right? It's almost like a given, the total opposite happens. It's got to be, Ed, right? Either that or you guys call me nuts about the market gods and all that stuff. Somebody's pulling the strings. How can that happen all the time? How? Yes, you're right. That's what I mean, right? There's always like the smart money's taking the other side of that. Like, right? Think about it, like rewind, right? And then I'll let you guys run. Going into the winter, the Europe winter, okay? There was no way to envision anything like what turned out this winter. Okay? Right? Even if it was a mild winter, with Russia invading Ukraine, everything like that, there was no shot. Europe was on the precipice of disaster. And not only did they avoid disaster, not only was the winter the most mildest winter ever, and nat gas plummets, right? They thrive. Like the economy improves, the stock markets go to new highs. I told you guys, every time I go on Twitter, I see somebody posting riot videos in France. They're burning cars in Paris. The Eiffel Tower is on fire. Every time there are France citizens revolting. And you pull up the CAC 40 and you're at new highs. Coin, CNBC, some of that stuff criminal what they did with that coin. Yeah, I know. I'm just saying, it's always the total opposite that happens. I don't understand how that, like Ed said, it's got to be rigged or something. I don't know. But it goes to show you, right? Everybody on one side of the trade, at the least, you have to avoid it. Even if you don't take the other side, you have to avoid it. You have to avoid it. All right, boys and girls, I chewed your ear off enough. All right. Yep. Everybody enjoy the rest of the night. Let's see how things shake out tomorrow or even into early next week. All right. And then, we see a couple of healthy signs with credit behind it. Maybe we'll get a couple days squeeze. All right, well, we could be patient here. In the meantime, look for some action in names because they're still working. All right. I'll post the flow show whenever it comes. Sometimes he keeps me up all night, Hartnett, but whenever it comes out, I'll shoot it out. I appreciate it. Always a pleasure, guys. Thanks for stopping by. I'll see you guys mañana.